His is a simple scalping system that works also at the higher time frame. 3 candles reversal intraday system is based on the reversal indicator. Time frame 15 minutes, 30 minutes or higher but with support and resistance indicator. Financial markets any session, London and New York. Forex indicators reversal indicator V.2 numbers of candles, 3, this indicator not reprint. Pivot points levels, JMO indicator, 3,3,3. Rules, 3 candles reversal intraday system long entry weight that appears the buy arrow. Buy when the JMO indicator cross upward. Short entry weight that appears the sell arrow. Sell when JMO indicator cross downward. Exit with fast profit target, 15 minutes, 8 to 10 pips, 30 minutes, 12 to 16 pips or at the pivot points levels. Stop loss 15 pips below or above the entry bar. The 3 candles reversal intraday system for MT4 is a strategy that basically pulls out one of the candlestick chart patterns and uses it as an isolated trading strategy. As anyone with a bit of experience in trading might know, that the real markets that are not that objective. The changes in the market conditions can many a times invalidate chart patterns and for that matter even a candlestick pattern. Having covered to some extent the double candle reversals in the previous article, now it is time to turn our attention towards the triple candle ones. A triple candle reversal is just a variety of the double candle reversal. It is comprised of 3 candles, with the first and the third ones being basically the elements of the double candle reversal, while the middle one is very small and might even be a doji. Just like the double candle reversal on a 5-minute chart is visualized as a reversal candle on the 10-minute chart, a triple candle reversal creates a reversal candle on the 15-minute time frame, if their closes match. As soon as the third candle closes and forms the 15-minute reversal candle, it would be followed by additional market players who are trading on the 15-minute time frame. This should make you more confident about your trade, because a reversal signal on a higher time frame implies a larger move, thus allowing you to aim for a wider profit target. However, many experienced tutors suggest triple candle reversals should be traded as double candle reversals and disregard whether they are creating a solid 15-minute reversal candle or not. Below you can see a 3-bar reversal on a 10-minute graph made up of a doji bar between the 2 outer bars. Strategy premise: this strategy uses the wick reversal system introduced in Pivot Boss and generates signals based on candlestick patterns. Wick reversal system, extreme reversal system, outside reversal system, doji reversal system, wick reversal system: 1. For a bullish reversal wick to exist, the close of the bar should fall within the top 35% of the overall range of the candle. 2. For a bearish reversal wick to exist, the close of the bar should fall within the bottom 35% of the overall range of the candle. Extreme reversal system: 1. The first bar of the pattern is about 2 times larger than the average size of the candles in the look-back period. 2. The body of the first bar of the pattern should encompass more than 50% of the bar's total range, but usually not more than 85%. 3. The second bar of the pattern opposes the first. If the first bar of the pattern is bullish, C greater than 0, then the second bar must be bearish, C less than 0. If the first bar is bearish, C less than 0, then the second bar must be bullish, C greater than 0. Outside reversal system: 1. The engulfing bar of a bullish outside reversal setup has a low that is below the prior bar's low, L less than L, and a close that is above the prior bar's high, C greater than H. 2. The engulfing bar of a bearish outside reversal setup has a high that is above the prior bar's high, H greater than H, and a close that is below the prior bar's low, C less than L. 3. The engulfing bar is usually 5 to 25% larger than the size of the average bar in the look-back period. Doji reversal system: 1. The open and close prices of the doji should fall within 10% of each other, as measured by the total range of the candlestick. 2. For a bullish doji, the high of the doji candlestick should be below the 10-period simple moving average, H less than SMA, 10. 3. For a bearish doji, the low of the doji candlestick should be above the 10-period simple moving average, L greater than SMA, 10. 4. For a bearish doji, one of the 2 bars following the doji must close beneath the low of the doji, C less than L or C less than L. 5. For a bullish doji setup, one of the 2 bars following the doji must close above the high of the doji, C greater than H, or C greater than H. As a way to illustrate this, take the bearish engulfing pattern. Typical knowledge says that a bearish engulfing pattern often signals that the market will move lower. But this is not often the case. Many a times, candlestick patterns can be invalidated, and the market will continue to baffle the trades. In this context, the 3 candles reversal intraday system is rather redundant and looks like a quick fix trading system. In this trading system, traders need to be quite aware of the fact that they should take into account the entire market context. This means, traders should also pay attention to the trends and the underlying factors behind them. Using the 3 candles reversal intraday system as a standalone trading system can lead to disastrous results, and here is why we do not recommend the 3 candles reversal intraday system to everyone. If you like price action based trading, then the